Hi, this is Professor Rujo with a review of Module 5. The Module 5 to-do list is posted. You'll see the due date on top. Now, Module 5 is really the last large module that we have. It covers Chapters 7, 8, and 9. We only do a portion of Chapter 7, as you see. The most important thing about Chapter 7 is about fraud, the Sarbanes-Oxley law, and what corporations are expected to do for internal control to make sure fraud doesn't happen and their assets are safeguarded. And so that's going to be the major focus of Chapter 7. There is a little presentation on what cash looks like on the balance sheet, but that's relatively minor. And that's it for Chapter 7. Chapter 8 is a little bit more detailed. It really focuses on two topics: accounts receivable and notes receivable. Accounts receivable takes up most of the chapter, and that's because accounts receivable needs to be valued properly. Just because someone owes you money, and in this case it's a business owing another business money in a receivable, doesn't mean that they're going to pay. Look what's happening in our current coronavirus crisis. A lot of businesses can't even afford to pay their rent. So other bills are not going to get paid, which means that if you're waiting to receive money from a business that's suffering, you're probably not going to be collecting it. In accounting, we're required to come up with ways in which we value our assets properly. And so what you'll learn about is something called the allowance method, which is required by GAAP for corporations in order to value or properly value their accounts receivable. And that's going to be the toughest part of this particular chapter, and it's not that bad. Objective 3 looks at notes receivables in a little bit more detail. Not much going on there, but a note simply is a loan, right? These loans are made because people who have an accounts receivable, so we're waiting to receive money from a company who can't pay in 30 days. So they say, hey, we need a longer period of time. And we might say, sure, we'll give you 90 days or 120 days, but we're going to charge you interest. And voila, your accounts receivable is now a notes receivable. And so calculation of interest is important in that part of the chapter. Chapter 8 wraps up with some analysis on receivables, because it's very important that we collect receivables on time. Most receivables are due in 30 days, and so we want to make sure we're collecting them at least 12 times per year, or at least every 30 days. And so Chapter 8 ends with that analysis. Chapter 9 looks at basically property, plant, and equipment. It looks at your long-term assets. And so in the very first objective, it shows you how they come up with the actual number that goes on the balance sheet. So when you look at land as an account, or buildings or equipment, and you see a number on the balance sheet, how do they determine that number? That's what you're going to learn in objective number 1 in Chapter 9, how they determine that number. Objective 2 looks at depreciation. And again, these assets are going to be used over a number of years. And unlike other types of things where we can use right away and expense right away, we are going to be using the depreciation methods that are outlined in the book. The emphasis is on straight line depreciation, to show how those larger assets, like a truck or a building, are expensed over a number of years. And that's going to be the focus of Objective 2. Okay. Objective 3 looks basically at what happens when we sell an asset, or maybe we trade it in for another one, or maybe we simply junk it because it's time to retire the asset. It's not valuable to anybody. So it looks at how to deal with that in Objective 3. Objective 4 is one of my favorite parts of this chapter, because it talks about intangible assets. And I really wish we could talk a lot more about that, because it's so important today. A lot of businesses base their entire existence on intangible assets, like a patent, like a copyright, right? Um, like a trademark or things like this. So you're going to be looking at and understanding the basics of those. That's just a basic introduction to intangible assets in this piece, just to become familiar with the terms. And chapter 9 wraps up with financial analysis. Again, are we using our assets well? Are we using our assets to generate a profit? Are we using our assets to generate sales? And that's how chapter 9 ends. Lots of little quizzes in between here. The exam number 5 on this module is all 3 chapters together, but it's broken down quite well. So I think you'll be doing quite fine with this. And that is the end of my share.